morning, everyone, and welcome to the 91st episode of the Veritas fact-finding series. And this morning, I'm joined by Mr. Bob Seeman. Good morning, Bob.
Good morning, Anthony.
Surfacing facts and revealing truths is a never-ending quest for us at Veritas. In each episode of the fact-finding series, we go on the ground to speak with industry professionals in an unscripted, candid, live video format to discover how we can make better investment decisions. In this series, and with everything we do, we believe the facts empower investors and that better information leads to better investment decisions. By way of background, my name is Anthony Scilipoti, and I'm the president and CEO of Veritas, which is an independent equity research firm based in Toronto, Canada. I'm proud to say over 20 years old and 100% employee owned and operated. Now, quick disclaimer, this broadcast is not to be taken as investment advice, and participants or employees of the Veritas group of companies may own securities discussed in this broadcast. While we love all our guests, and Bob in particular, this session may contain forward-looking statements, investment opinions, and comments that we do not agree with at all. I borrowed that throwing of the page. If you didn't figure that out, that was from Johnny Carson. If you haven't watched those shows, I love it. I love Johnny. Anyway, quick comments on Bob. Now, Bob is an attorney. He's an electrical engineer, and he's an entrepreneur. He was head of strategy for Microsoft in London and a technical consultant to the European Commission. Aside from that, he's gotten involved, and we're going to discuss this, he's gotten involved in what has become cryptocurrency and largely Bitcoin. And he's authored a number of books, most in particular, all in critique of Bitcoin. So I'll start off with the positioning. And one of the most interesting titles is the one called The Coin Men, where the I is kind of held down out of the way, so it sounds like the con men. Fantastic. He's spoken at numerous money laundering conferences and advises the US government on issues related to crypto. Bob, interesting background you have. Tell us about yourself, why you got interested in crypto and particularly Bitcoin.
Well, I first came across Bitcoin in 2011. An entrepreneur came to me, and he was looking for a loan, which turned out to be for one of the first Bitcoin-specific mining machines. At that point, people were just mining on their home computers. And he explained it to me, and I, as a lawyer, electrical engineer, didn't make sense to me from a use of electricity point of view. It seemed like it was a big waste of electricity, and it didn't seem like it made a lot of sense from a legal point of view as a lawyer. I mean, I hadn't looked at all the laws around the world, but I figured it had to violate some law, pyramid, Ponzi, some sort of thing like that. So I turned him down, and I only kind of got back into it again about 2017. So that was when the price was taking off again, and it was beginning to make headlines. And I started going to a number of blockchain cryptocurrency conferences. This is when they were doing a lot of the ICOs, the initial coin offerings. Yep. And I met a lot of these companies, and it really seemed like this was .com all over again. I had been in the .com. I founded a .com company, which went bust, like almost all the others. And I didn't see a lot of there. I saw a lot of hype, just like in the .com. And then it died down again because of the crash in the price. And I focused on cybersecurity. So I've been doing a lot of cybersecurity work, advising large companies on issues like ransomware, and also small companies that come up with new innovative technologies to serve those larger companies, better enterprise solutions. And over the last couple of years, as we've seen in cybersecurity, there's been a massive growth in ransomware. Ransomware is, of course, where often somebody clicks on a link and then a virus is downloaded and it encrypts the entire enterprise's system, as we saw with the Colonial Pipeline issue, where a Colonial Pipeline was shut down on the East Coast of the United States recently. But this correlation with the rise of Bitcoin is quite obvious. It used to be that ransomware, they asked for a couple $100, you paid it in a Western Union transfer or a gift card. Now they're they're asking for 200,000 plus multi-millions of dollars, and they're getting paid in Bitcoin. So so what first put it on my radar last year, before I started writing these books, was how it facilitated ransomware. I started looking into it, and all the other problems of national security, North Korea is funding their bomb, stability of the financial system, purchases of all kinds of illegal goods and services. So the list of negatives of cryptocurrency goes on. And I started looking at it from a legal perspective, and I didn't like what I saw.
Right on. Now, if I look back a little bit over time here, Bitcoin peaked in 2018 at around 20,000. We're talking all US dollars here. Then it fell back and back down under 10,000. And then it rallied in April of 2020. And this is particularly interesting because we had the S&P down 35% in March due to COVID. And, crypto, Bitcoin in particular, we'll speak about here, proved to be almost a perfect nice hedge there. Crypto was up. It actually peaked in April of 2020 at 60,000. Went totally the other way from the, our stock markets, even gold. And then it fell 50%. And then it hit a high of 66,000 in 2021. Okay. And now it's just trading under 40,000. So, yes, it's been volatile. But if you look at it over a longer period of time, over 5 years, it's up 2,400%. The S&P's up 80. In the last 2 years, which has been the most troubling, difficult time in markets, you have the Bitcoin's up to 350%, and the S&P's up 42%. So, sure, it's got all its problems, and we can, and we're going to discuss them. But you've had a nice return if you've stayed the course.
Well, I am not an investment advisor. I'm the last of it, last person to ask for investment advice. I use an investment advisor because every sort of investment I've ever made has lost money. I just talk about what Bitcoin is. What Bitcoin is gambling. It's not an investment because it's not even an asset. It's got no cash flow. It's got no utility. Bitcoin has got all the excitement of gambling. It's got all the incentivization from marketing of a pyramid scheme and all the fake profits of a Ponzi scheme. At the same time, it does have the legitimacy of trading, but without regulatory oversight. So the market is manipulated. And that would be my response to what you've seen in the marketplace, is that there are major holders of Bitcoin that manipulate the market, not just on a daily, hourly basis, but on the microsecond basis. There's no disclosure. A minimum of 42% of the Bitcoin is owned by 100,000 people, probably 50% more than that. A minimum of 25% of the Bitcoin, probably 50% more, is owned by 1,000 people. There's no disclosure. There's no regulatory oversight. The crypto exchanges are not regulated. Imagine what people would be doing on the markets if that was the case. That guy, Jordan Belford, the Wolf of Wall Street,
yep,
he's promoting crypto.
Of course he is. But it's a means of exchange. We have governments like El Salvador that have created it, that have accepted it as currency. A number of other, especially South America. And this is, as I expand my knowledge of what's happening around the world. If you're in Venezuela and you try to hold a Venezuelan currency, it's not worth much. And so you want to convert it into something, and converting it into crypto or Bitcoin is something that can be done outside of the government's purview. And so you can store that wealth. And this is happening more and more, especially in these, countries where there's overriding or strong governments that are a big problem. Anyway, what are your thoughts there?
You mentioned that Bitcoin is money. This is one of the fallacies. It doesn't meet any of the criteria of money. Money reduces transaction costs. So money's got to be a medium of exchange, it's got to be a store of value, and it's got to be a unit of account. So even it's not a unit of account because even Bitcoin conferences don't price their conference fee in Bitcoin. It's not a medium of exchange because almost nobody uses it. And it's not a store of value because overnight it can lose 10%. And over the last 4 years, as you say, 3 times, it's lost more than 50% over the last couple of years. Specifically on the example of El Salvador, that's a fascinating one. And I think that is a great experiment, a proof point. And I refer everyone to a paper, just type in Google El Salvador NBER. It was released this month on the failure of cryptocurrency in El Salvador. And before I wrote the book, I made a prediction. The prediction in the book it turned out to be true. Is they announced at the beginning of the summer last year that September 7th, Bitcoin would become forced tender in El Salvador, not just legal tender, because they didn't have their own currency, they just had US dollars. But they made it a requirement in the law that every individual and every business must accept Bitcoin. It wasn't just an option, they had to accept it. And this study was a very thorough study, research on the ground. And they found, and it also wasn't just that, they gave everyone a wallet and $30 in Bitcoin for free, every citizen in the country.
Yeah.
The study shows that almost everyone just cashed in that Bitcoin for US dollars, traded it in. And almost no transactions were done using Bitcoin. The big argument why they wanted Bitcoin, at least this was the public argument of the president, was that so much of their income for the country comes in from remittances from expats. In February, 1.6% of remittances came in through Bitcoin. It's a complete failure. It's proof that it's not money. It may have some uses. I'm not saying it doesn't have any use at all. So sometimes I'll say that, oh, it's got no uses. Well, what I mean is it's got virtually no uses. And in comparison to all the problems, it's not worth it. And so in Ukraine, right now in Ukraine, there are programmers who continue to do their work for Western countries. However, temporarily, the system's down, right? The banking system's down. You can't pay them. So temporarily, Bitcoin is a good method and is being used to pay them.
But you don't think it's going to be sustainable?
No.
People are transacting.
Virtually nobody's transacting. See, because nobody wants to be that guy in 2010. There was a guy in 2010 who bought 2 pizzas for 10,000 Bitcoin. That's about $400 million today. Nobody wants to be that guy. People buy Bitcoin because they expect that they'll be able to sell it in the future for more. So they don't want to part with it to buy a coffee. It's just, and retailers don't want to accept it either because they have to immediately convert it at an extra cost back into dollars to pay their employees and pay their suppliers. It's not used as a medium of exchange. It's not a good store of value. It's not digital gold.
All right. If anybody has any questions, this is live. So if you type in your cover over the Q&A symbol at the bottom, I'll just look at my phone here beside me and get your question and make sure that I address it with Bob. Bob, now for those of you on the listening in, I'm sure you've all followed to some degree Michael Saylor. And he's considered, he's one of the largest holders of Bitcoin. He's public about it, and he's given many talks on why Bitcoin is, you just mentioned it, it's interesting, the digital gold. It is the future of storing of value. What is he missing? Well,
he's certainly not missing a lot of money.
No.
He is a very successful and intelligent executive. What he's missing is, just because you say something is digital gold and you repeat it and you make a very good rhetorical argument, which he does. He's very charming. He's very clear. He has a great vision. And I would wish that we could invent digital gold. I mean, this is a great wish. If we could invent something that was not correlated to the market, like gold, right? That was negatively correlated to the market. Fantastic. It'd be great for a portfolio. It's just that Bitcoin is not it. It doesn't. It's for the last 2 years, it's been correlated to the market 0.5 out of 1. Recently, it's been correlated to the market 0.8. It tracks the market. It's not negatively correlated. It doesn't have the properties of gold. Gold has been a store of value for over 9,000 years.
But just because it's 9,000 years doesn't mean it's going to be a store of value going forward.
True. Yeah. And
gold is actually proven to be the biggest, one of the biggest disappointments. I mean, we're here still sitting at 1900, and there's wars in Ukraine. There's people dying still of COVID in parts of China. We're still in lockdown. Talk to me.
Yeah. Well, I'd love if something like Bitcoin was digital gold. I mean, I'm an entrepreneur. I love inventions. Bitcoin is simply an accident. And you have to look at the evidence. That instant, for example, you can look at a lot of evidence, a lot of correlation over the last 2.5 years. But a lot of that is in the book. But if you just look at that incident about 2.5 months ago, that surprise moment when the Russian tanks crossed the border into Ukraine,
yeah,
Bitcoin crashed, gold did not.
It's interesting. So Bitcoin has tended to follow this cycle every 4 years when there's a reduction of the number of gold Bitcoins being released into the market. It's in the program, right? That's set to happen again in 2024. It would seem, in 2020, that was the peak that started, that came off from previous periods. Is there any sense to that? That could, we're reducing the number of the quantity of something. It makes the remaining quantity of a higher value.
Well, it's an excellent question, Anthony, and a lot of people talk about that. And I'll answer the question, but let me say it's a good example of how this is a new technology that too few people who are buying into it don't thoroughly understand what's going on. So yes, what you're talking about is correct. The ways this fictitious Satoshi Nakamoto designed the software in 2009 is that every 4 years, the amount of Bitcoin that could be issued to the public every 10 minutes by the miners gets reduced by half. So right now it's 6.25 Bitcoin every 10 minutes can be issued to the public.
Yeah.
However, that doesn't affect the price of Bitcoin. There's already 19 million out of the 21 million Bitcoin issued. So it's just an incremental 6.25 every time. So and everyone knows what maximum supply is already. They know maximum supply is going to be 21 million. So the change of every 4 years of this small amount, it's just a small amount every time. It doesn't do it, but in people's minds, they have it. But I think the bigger misconception people have about Bitcoin, and it probably is not anybody on this call, but when you talk to people on the street, and I encourage people to talk to their friends and neighbors about Bitcoin, most of them, when you ask them, well, what happens to your money when you buy Bitcoin? They kind of think it's something like, well, the money is either directly or indirectly, like buying on the public stock markets, the money is helping something grow, like helping a company grow or helping Bitcoin grow. How else could you get a return without that? And I have to explain to lay people that no, that's not what's happening. You're just cashing somebody out. You're cashing somebody out, for example, with this mining, when the mining reward was huge every 10 minutes, back in 2009, 10, 11, before it got half the first time. They're the ones that hold probably about 60% of the Bitcoin, those initial guys. So you're cashing those guys out. You have to ask yourself the question, why are they selling?
They're only selling small increments, right? Someone's buying them. Just
but
because
well, true, they are. If they were to sell large increments, that would crash the price. They're just feeding it into the marketplace, and they're trading it, and they're manipulating the market. It's the small little guys, the little fish that are getting eaten up by the whales with all this manipulated wash trading, pump and dump, layering, spoofing. It's happening all the time.
So perhaps that'll lead us to, we got a good question here also from out in Vancouver. Scott sends a few comments, but there's 180 real currencies. Let's call them fiat currencies in the world. There's over 13,000 cryptos. Do you think any of them might become real currencies, let's call it, or fiat currencies? And do you think there's any cryptos that actually do make sense?
I think the question is whether it's going to become a medium of exchange, like money, like fiat currencies. No, the governments are adopting central bank digital currencies, which are essentially crypto issued by the government. And if people have a choice between crypto issued by the government and or something similar, that's a liability of the central bank of the government versus something that isn't backed by anything. People are going to choose something that is backed by the central government, and that is stable. These are not currencies. It's not money. The main reason is because of their volatility. It's just gambling. It's the volatility that makes it exciting. That's what people like. That's why people are buying.
So the Bank of Canada just did a study, and I'm sure everyone on the screen is most has paid attention here, and they found that the knowledge among the Bitcoin owners and non-owners, their knowledge of the network was weak, and they scored lower on financial literacy testing. What are your thoughts on the Bank of Canada's work? And so what?
Yeah, I mean, I agree. I mean, it seems from understanding the people who buy Bitcoin, it makes complete sense. What I read in the Bank of Canada report, that those who buy Bitcoin, they know a lot about the technology of Bitcoin, but they are otherwise, well, they are financially illiterate. And that's because Bitcoin is not about finance. And it also should not be about the technology. A car is a car because it gets you from point A to point B. It doesn't matter what's inside that car. It doesn't matter whether it's got an electric motor or whether it's got a combustion engine. Just like with Bitcoin, it doesn't matter how Bitcoin works. It's completely irrelevant. What matters is what Bitcoin does. And we've talked a little bit about how Bitcoin is not a store of value. It's not money. But people who promote Bitcoin, they're constantly talking about how Bitcoin works. All this techno babble about decentralization and blockchain. It's completely irrelevant. It doesn't matter how Bitcoin works. So that's why the Bank of Canada determined that people who buy it understand all this technology, but they don't understand finance. That is a big problem. They are going to lose their shirt. These are financially illiterate people who are the retail traders of Bitcoin. Now, that's not to say this audience who's interested in buying Bitcoin for high net worth people are financially illiterate. Not at all. It's a trading opportunity, and it's not a problem for people who have the money to gamble and the money to lose. My concern is for the 55% of people that are underwater right now. These are small players who 20% of whom who buy on credit. They don't have this money to lose. They don't have this money to gamble. They're gambling with their student loans. They're buying it on their credit card. If the price drops to 35%, 70% of people will be underwater.
Sorry,
and you mentioned how
if it falls to 35,000, you mean?
That's correct. If it falls to 35,000, and a lot of people wonder, well, how can that be? I mean, as you say, Bitcoin has gone up from 2009, from virtually nothing to 40,000 today. Of course, the number of buyers has gone like this, and it continues to go up with the hype. So if it's down at 35, 70% of people will have bought in the last year for more than that.
So the central banks are starting to create their own currency. You talked about that. How do you think that factors into where Bitcoin is, and as well as the rest of the currencies?
Well, I think the main point is that crypto and the actions of Facebook with their Libra and Diem stablecoin initiative, I think this has pushed the central banks into modernizing, moving into the modern world. So I think that's good. I think it will put another nail in the coffin of crypto when they issue their central bank digital currencies. However, a lot of people think that the central bank digital currencies are going to be based on blockchain for sure. Blockchain is just a series of technologies that have been developed since the 1980s. And it's not necessarily the right set of technologies for a central bank digital currency. At the end of the day, all a central bank digital currency is a liability of the central government. Of course, when we've got our dollars in the bank, that's a liability of the bank. When we take the money out of the banking machine and we hold those dollars, that's a liability of the Bank of Canada. Likewise, when you have a central bank digital currency, it's a liability of the central bank. Mm-hmm. That may be much more simply effected by simply having a third bank account. Everyone can have their checking account, their savings account. There may be, at your commercial bank, there may be your central bank digital currency account. It doesn't have to be revolutionary technology. It may be. It all depends on functionality that the government wishes to employ.
Well, the reality isn't much of the transactions that take place right now already digital. I mean, the Scotiabank Arena, many of the sports facilities now no longer accept cash. That's happening more and more. The use of cash is declining anywhere between 5 and 10% per year when I looked at the stats. And so you'd almost say that we are in a digital world already. I can now, from my phone, transfer money from my Canadian account to my Spanish account. And it happens overnight, from Canadian dollars to euros.
Absolutely, and we've got these free interact transfers. You just have to need, from your app on your phone. You just need somebody's email address, and you can transfer money instantly to other people for free. So yes, in Canada and United States, where we have good technology, where the transactions are fast and getting a lot faster, particularly in the United States, where they need to catch up. It doesn't necessarily, that's why I'm saying it doesn't necessarily need to need new revolutionary technology. The technology of transfer may be the same. It's more of the regulations and other details that may need to change. Because right now, when we use digital money, it's commercial bank money. It's not central bank liability. It's a liability of the commercial bank. And that's what's going to change.
Yeah, the only weakness I would see in that comment is that's the case in Europe. That's the case in here in North America, but in Central and South America and in many other parts of the world that I haven't mentioned, the ability to transfer money that easily is very difficult. So
I agree completely.
being able to do that in some format, call it cryptocurrency of your choice, is appealing.
Yes.
Is appealing to many. And so
yes,
from that perspective, and there's more people living in those other parts of the world than living in the parts of the world that I just mentioned, where we do have some type of currency, some kind of medium of exchange, which is something we can rely on. But what about that?
Yes, I think in those countries, there is a movement towards having a token type, doesn't necessarily mean blockchain, but a token type central bank digital currency. So I think they will be adopted. The Bahamas already has the first one.
And but you don't think that's going to be something that doesn't have a central bank backing?
Oh, I think they will have a central bank backing, just like in the Bahamas.
That's what I mean.
I think in those countries you're talking about, absolutely. Yes, there will be central bank digital currencies issued by countries where their banking infrastructure, unlike Canada and the United States, is not that advanced.
So on the show over the last couple of years, we've had Anthony Diorio, one of the founders of Ethereum, on the show. He's one of the most successful crypto personalities in the world, really, and he's Canadian. And he told us about the technology he built and his views. What would you say to him?
First of all, congratulations. It's tremendous what he's built, and it's tremendous for Canadian entrepreneurship. He's built a superb initial concept of a decentralized computing platform. Someday it will grow to be valuable. There will be applications on it that will provide value to society. Right now, I don't see them. Every time I speak, I ask people to give me valuable applications that give value to investors, to users, to society, and other than crypto. And it's not just on the Ethereum exchange. I say to all permissionless public blockchain, what is an application that has actually added value? Right now, the Ethereum network has been used too much for get-rich-quick schemes. The cryptocurrency on the Ethereum network, Ether, it's being used like Bitcoin. It's being used for speculation. It's being used for gambling. The system would work a lot better if it was used for what it was intended to be used for, to be essentially the electricity payment to run the system, or they call it gas. Someday the system will work as intended. I'm confident either the Ethereum system or something competitive.
So I'm just going to call out someone else. So we've had Chris Mathers. He's a renowned private investigator on our show. And he commented that cryptocurrency is the currency of criminals. And so I guess in your work, you would say that that's something that resonates.
Absolutely. There are more illegal transactions using Bitcoin than legal transactions. The industry commonly says, oh, well, only 0.15% of all the transactions using Bitcoin are for the purchase of illegal goods and services. That's correct. The problem is that over 99.7% of the transactions using Bitcoin are market trades. So that means less than 0.15% of the remaining transactions are for the purchase of legal goods and services. Just to quote John Reed here, I have a quote from him. John Reed Stark, he's the former head of internet compliance at the SEC. He sums it up quite well. He says, crypto's liquidity risks, price volatility, cybersecurity vulnerabilities, high fees, money laundering, tax issues, terrorist use, environmental consequences, and countless other dangerous externalities render accepting Bitcoin not just perilous, but akin to transacting in blood diamonds. I agree.
Well, Charlie Munger calls it rat poison, right?
Yeah.
Now, so let's look at this. How does this end? What's the catalyst? I mean, we're still at $40,000, and I've given all the numbers of the transactions, and people have made money. And so, what are you watching for that could make your prophecy come to fruition?
Yes, I think long term, this is going to almost zero. It's going to be eventually priced, in my view, something like what a Briex share certificate is sold for on eBay right now. It'll be a novelty item to own a Bitcoin or a Satoshi. You might even trade it on eBay. I think the Achilles heel is the environmental problem. Bitcoin, just to run the Bitcoin network, never mind all the other crypto, just to run Bitcoin takes 0.6% of global electricity production. That's the same amount of electricity as the Netherlands or Sweden uses. To put that in context to other electricity use on the internet, the public cloud, Apple, Facebook, Google, Microsoft, Amazon Web Services, Netflix, all the public cloud, which is almost all the information that most of us use over the internet. It comes from the public cloud and is processed by the public cloud. The public cloud uses 1.0% of global electricity production. That's to provide all those wonderful goods and services we use. Just to run Bitcoin takes 0.6%. A year ago, Greenpeace was accepting Bitcoin for donations. A couple of weeks ago, they came out against Bitcoin, against its proof of work and energy waste, and they're lobbying to effectively eliminate Bitcoin as we know it today. So I think that's its Achilles heel.
Interesting.
Regulations are happening. The European Parliament Economics Committee considered but rejected banning Bitcoin, not just Bitcoin mining, but Bitcoin use in the European Union about 2 months ago. That's going to come up for another vote. The Biden executive order of about 2 months ago, it said that innovation must be responsible and subject to a lot of concerns like cybersecurity, national security, fiscal, but also environmental. So you're going to see a lot of pressure on Bitcoin changing from proof of work. However, it's the proof of work that makes the miners who have huge control over the Bitcoin network, that makes them money. So they're going to be, and they are very reluctant to change this. They make money by wasting electricity. The more electricity they waste, the more money they make.
So we have another question came in, and if anyone else has a question, please hover down at the bottom and type it in. So NFTs have apparently imploded of late for no apparent reason. For no apparent reason. There's still lots of potential buyers or pawns to be had in the crypto theater that may elevate them for a while. What implodes the bubbles of all cryptos, and which we just talked about, but how do you think this plays into NFTs?
That's an excellent question. So everything has a whole spectrum, but the vast majority of NFT trading was wash trading. Again, not regulated market activity. What you had is you had people who, and still do have, a lot of people who own a lot of Ethereum because they're largely minted on the Ethereum. This is one of these get-rich-quick scams that I was talking about that the Ethereum network is being used for. So people hold a lot of Ethereum, but they don't want to dump the Ethereum on the market because that'll crash the price of Bitcoin. So they came up with various ideas over the years. NFT was their latest idea of how do we spend this this Ethereum, and they figured, okay, great. Well, the latest one was we'll come up with these NFT concepts. We'll help some starving artists sell their art. Well, it's not how it really worked out. What really happened was it could have been a group of people, but often it was just one person who traded up the price of a particular NFT with wash trading, pretended to be 10, 20 different people all bidding it up. Then some sucker would come in and buy it, and then they would all leave. And that's what we've seen happen. It was that's why I never wrote the book, because it was so obviously a scam.
So it's a store of value, but if someone pays $1 million for a picture and it's an NFT, that it's worth $1 million so long as they can turn it around and sell it to somebody else for $1 million.
And that's
so that if this washing could stop,
that's
because
what happened. Yeah, as soon as a sucker comes in and buys, almost all the other wash traders disappear, and then somebody's holding this asset. For example, that guy who bought Jack Dorsey's first tweet, bought it for a couple $1 million, and then he put it on auction. The highest price he got was $207.
But no one talks about. Yeah, I know that story as well. No one talks about these things. That's the other thing that happens. Just quickly, what we're going to do here is we're going to launch our poll, and everyone can tell us what a great job Bob did, and give us some feedback for our next guests. Let me just close that. So again, we've been watching, we've been waiting. These fads, you mentioned the fad that was the .com. I lived through that as well. The fad that's been the housing market in the US, now the housing market in Canada. We've had bubbles even in commodities, and we have this crypto. You mentioned that it could come up, that it comes down because of environmental issues. There's environmental issues with also with rail, with air travel, with so many other things that I think that are causing a problem. I wonder if just the concept of the speculation itself, if I buy something with the intent to sell it to someone else for more, it works so long as someone else wants to buy it for more. The moment that they perceive that they can't buy it for more and sell it to someone else for more, then the party stops, and we kind of have a situation of the hot potato. That's kind of the story I like to use.
That's what Bitcoin is.
So one of the things that you meant, we can talk about central banks causing a problem. We can talk about the environmental issues. But I think it's more than that. It's the psychology. Yes. What breaks the psychology of the buyers of the Bitcoin, who are believers? As you said, you've been invited to speak at various Bitcoin conferences and decided not to go because you're for fear of, you'd have to have bodyguards and manage your life, because the people that believe, they truly believe. There's a huge belief system here.
Yes, it's a cult.
Correct. So talk about that.
I think at this point, it'll have to be regulation, government cracking down. First thing, the exchanges are going to be regulated. There's going to be more and more bans of Bitcoin mining, the use of Bitcoin for environmental reasons. There will also be some consideration of restricting the advertising at very minimum of crypto, in the same way that advertising gambling is restricted. There may be even some prosecutions of those operating the Bitcoin ecosystem for running the world's largest gambling casino, because that's what it is. I've looked at it from a legal perspective, and at least under the US laws, I believe that it's a violation of the federal Unlawful Internet Gambling Enforcement Act as an unlawful game subject to chance. Bitcoin is really no different from, or a little different from, betting on NFL football or horse racing. The odds are set by what other people think and how other people think the race will end in horse racing. And when you're betting on the point spread in NFL football, you're betting on how others think the game will end. Similarly with Bitcoin, when you buy it, you're betting on whether people will buy your Bitcoin for more than you bought it for. It's a game of gambling. It's a confidence game. It's at minimum a scam. It's at most a violation of the gambling laws.
It's interesting. I think that it's all interconnected. So we've seen the Reddit group and many of the meme stocks get pummeled. We're seeing the rollover of many of the dream stocks that didn't have cash flows and didn't have earnings as we enter a period with rising interest rates. Those valuations change as growth rates come down, which were propped up because of what happened during our COVID lockdowns. I think it's all interconnected. I think the other aspect, if I might, is that, you know, once you start seeing other froth come out of other markets, it's all interrelated. Now, people tell me I'm wrong about this, but I wonder, you may choose to disagree with me, but I think it's all interrelated. When the individual who's buying Bitcoin is also fine with having held Zoom all the way up and all the way down. And,
I agree.
And is likely now thinking that you know, we could go back to where we were, and may not be aware that, you know, the growth rates changed and therefore the valuation changes and discount rates change because now the central bank rates change and so forth.
Right, but with Zoom, it's providing a service to people and it's getting cash flow. Bitcoin has no cash flow, it has no utility. And so people, that's why it's highly correlated to the market. It's a speculative, not even asset, it's a speculative thing. I don't even give it the credibility of calling it an asset. So it's certainly not an investment.
It's well, in order to be an asset, just by the accounting world, it has to be a store of value. And it has to have something that can be exchanged for a price. And we could, and as you've argued, that's not the case. Now, you already answered that there are any cryptos that you think will have value that could survive long term. And I think in general, do you have any in particular?
I think those with utility will. So, for example, Ether on the Ethereum network, that has utility.
Yes.
The problem with it is that the price doesn't reflect its utility at all.
Right.
Its utility is a tiny fraction to run that an application on the Ethereum network. It's a tiny fraction of the price of Ethereum. And also, there's competing networks to Ethereum.
Yeah.
And so there's going to be almost perfect competition here. A lot of people think, well, these networks have a first mover advantage where you're going to kind of lock people in, like Microsoft locked people in, and therefore the crypto that runs that is going to be worth much more than, say, a secondary one. I don't subscribe to that philosophy. I may be wrong, but I think there's going to be competing networks, and the price is going to be competed down to the marginal cost of operating the network. So that's on the utility side of things. Then there'll be also crypto that will be asset-backed. Today, there are asset-backed crypto.
Yeah.
A lot of people don't know there's gold-backed crypto. Very few people are interested in trading that because it's not exciting. It's not volatile.
Is that XRP?
No, XRP. That's a whole other story. That's it's supposed to be a competitor to SWIFT, the network that transfers money between the banks. It really hasn't turned out that way. And they've got some securities issues with the SEC. And by the way, to answer your question, that is another huge issue with crypto that can deflate the whole thing is the SEC is really cracking down. They have said in a small way, well, they've effectively said that Bitcoin is not a security, at least the Bitcoin issued to date. They've hinted that Ethereum may not be a security. However, they've said that almost all other crypto is a security. So the SEC and Ripple that issues XRP, there's an ongoing issue there, and the SEC just doubled the size of its crypto enforcement team.
Yeah,
it's going to be a major crackdown. I think that will also deflate this bubble.
Interesting. Someone, a couple last questions here, and I'll let you go. Someone's asked what's the purpose of the central banks issuing digital currency? We already use central bank issued fiat currencies in a digital fashion, and they're all in their legal tender. So I think we've answered that. That is the case. That's taking place. And then other secular growers equivalent in the crypto space.
I'm sorry, I don't understand the question.
Yeah, are there secular growers equivalent in the crypto space? I think we've answered. Are there? I touched on. I mentioned XRP. You mentioned if there were cryptos that were actually backed by something.
Got it.
That would be something that you could see having a value.
Yes, that's absolutely correct. Yes. So, for example, if there is a crypto that's backed by real estate, that makes sense. It's a way of financing real estate. However, that would clearly be a security. So crypto could just be one big growth area of crypto, and decentralized finance in the bigger picture is new ways of new financing vehicles, but they are clearly securities and would have to be issued with all the securities protections.
And that's interesting. And I'll leave it on this thought. We had last year at our real estate and housing conference, which we'll be holding again this year in October 6th. We had a number of disruptors, fintech companies, and one in particular is issuing. You can purchase a unit of a particular house and selling it as an investment. And it's in essence as a crypto. And I think you're right that this is something that could gain some momentum and a use for the technology because it's backed by something. The fact that Bitcoin is not backed by anything, this is one of your big concerns for its sustainability.
Precisely.
All right, everyone, thanks for your attention today. Bob, keep up the fight here, and we'll see what happens. We'll have you back.
Indeed, we will. Who knows? It's the Wild West. Thanks, Anthony. It's been great. I really enjoyed this.
Thank you.